And business news continues. Lufthansa has reported a drop in earnings amid falling passenger numbers and increased competition in Asia. Our third quarter results, which cover the busy European summer season, come off the back of earlier profit warnings amid strikes which hit the German flag carrier in the first half of this year. From Berlin, CNA correspondent Trent Murray has more.
Well, Q3 is traditionally the strongest quarter for European airlines as local and foreign tourists alike flock across the continent for their summer vacations. But for Lufthansa, low yields and increasing costs has seen its quarterly profit drop to $1.4 billion, down almost 10% from the year prior. The Lufthansa Group is the world's fourth biggest airline company by revenue and includes subsidiaries like Swiss, Austrian, Brussels Airlines and Eurowings. But it's at its core German brand Lufthansa where the group says it's facing financial pressures. The Frankfurt-based company today saying its services to the Asia Pacific have been hit hard on two fronts. First, it's had to cut its services from Frankfurt to Beijing amid increased competition from Chinese carriers. They say, like many European airlines, they're unable to fly over Russian airspace given the geopolitical tensions between the EU and Moscow because of the war in Ukraine. They've complained that the added time and cost of avoiding Russia is something that Chinese carriers don't have to worry about. And for that reason, it's become financially unviable to offer services to the Chinese capital. But they also complain about competition from what they describe as carriers from the Gulf and Bosphorus, meaning the likes of Emirates and Turkish Airlines, who continue to use their geographic position to expand connections between Europe and Asia using state-backed investment. Other challenges include a slower recovery in corporate travel, delayed aircraft deliveries from Boeing, and tensions in the Middle East, causing the cancellation of flights to Tel Aviv, Tehran and Beirut, destinations which Lufthansa has now suspended services to well into 2025. Management has reaffirmed that it's targeting an overall operating profit of between $1.4 and $1.8 billion for financial year 2024. But analysts say the latest quarterly results have cast doubt on whether this can be achieved. And with the cancellation of flights to Beijing, it's now expected Lufthansa's services to Changi and its Star Alliance partnership with Singapore Airlines will have to do much of the heavy lifting for the German flag carrier's overall growth strategy across the Asia Pacific. Trent Murray, CNA, Berlin.